Don't make a 20-year decision based on a couple of weeks of headlines. People are still making decisions that ultimately you will not be able to be a judge of until at least a decade from now, based on the... Here's the deal. Here's what I can tell you. We've interviewed some incredibly successful people. There is one underlying common trait in all of those success stories is at some point they reached a point where they went, am I actually going to take this next step or not? And they look around and they go, far out, there's a whole bunch of reasons why I shouldn't, but they actually took that step anyway. My biggest takeaway for anyone who's listening to this is development is fun and it's exciting and it's rewarding and it's profitable if you do it right.
Thanks for coming, mate.
Thanks for having me, mate. Good to catch up again.
100%. Yeah, you've been on our other podcasts and plenty of value there, and definitely someone we watch closely and we're fortunate enough to listen to and have your ear and your advice when needed and when it comes our way. So yeah, mate. Thanks for coming up from Torquay.
It's a pleasure, mate. Congratulations on kicking off this I guess, content for your viewers and your listeners, because I think there's a real appetite for it. I think, I've spent most of my property career being in the passive investment lane, and you guys are in the active investment lane. And I think for anyone that can really embrace the active side, there's lots of fruit. We always talk about it as, turning apples into apple pie. And I think that you get to do that. And so for those people who have the appetite for, you move a little bit higher on the risk scale, but the return is pretty exciting. And so I'm excited to chat to you today about that.
Yeah, awesome. And yeah, definitely a podcast that you've told us to be doing for a while. So you were, obviously one of the first people we reached out to when we did kick it off. And yeah, it's been going fantastic. There's the usuals out there that sort of love it. And yeah, the growth has been amazing. So should listen to you a bit more by the sounds of it.
There is a niche for people who want to tap into your subject matter expertise, which because there's so many books and seminars and gurus who say get into property development, but what you do is actually break it down so that people go, okay, the strategy is property development, but what are the tactics? What do I need to do? Like, how do I convert intent into capacity and actually get it landed on the ground? And I think I've been around you for long enough. I've been around you for a long time, so I know that you actually land the plane better than most. And I think that I genuinely think there's a real appetite for this space. So I'm not surprised to see that you're building a community of people that really are interested in what you have to say on this topic.
Yeah, perfect, Bryce. No, I appreciate that. So whilst we've got you, what are your thoughts on property? We're in 2024. You'd have your opinions where interest rates are going. You'd have your opinions on stock and the proposed shortage that we're going to run into. You'd have your thoughts on immigration. There's lots of different, for me and the community out there being property developers, we feel like there's some strong pillars that hopefully will go our way. With all those things I just mentioned, what are your thoughts on the landscape, and what are you seeing, and what do you think the next couple of years hold?
Yeah, I think my underlying thesis is based on one thing. I was chatting with Simon Kustenmacher, who is a well-known demographer in this country. We had him on our podcast on the Property Couch, and he's German, and he's had a lot of international experience. And one of the things that he said from that outside look into Australia, even though he lives in Australia, he goes, I'm just fascinated by the fact that you have an immigration policy that is so out of whack with the housing policy. And it's just a profound statement, because if you think about that, what he's saying is the bath's full, the plug's in, but you guys keep throwing the hose in and just keep throwing more water, and so the water's spilling out the side, but it's like, don't worry, just keep coming here. And I think that's and
we'll figure it out.
We'll figure it out on the run, and then we'll have rental crises and supply crisis, but that's okay. Let's just keep it in, because that's, on one hand, the politics is we need more people to come in so that we can generate economic activity so we don't go into recession, and that's how they stay elected. And then on the other hand, you've got just this problem around housing. I hope that goes away, and it won't. So I think for people like you and me, I'm in the passive space, you're in the active space, but we're both in the same lane. Anyone who's listening to this should be incredibly excited by that, because if they get to 2030 and they look in the rear vision mirror to this day today, here we are in 2024, I'm almost certain every single person who has a moderate risk appetite would have said, geez, I wish I had bought more back in 2024. But that's on the back of 2023 probably being the hardest that you and I have experienced in our professional life for some time. Heaps of uncertainty, all those interest rate movements. It went incredibly spiky very quickly. So sentiment is low, but I think opportunity hasn't changed. In fact, I think with interest rates doing what they've done over the last 18 months, and particularly where we are here in Victoria, but we talk about nationally, but particularly in Victoria, the data is actually telling us that the number of bond lodgements are falling off a cliff, which is code for investors are leaving the market because the government is treating property investors like ATMs for the state. Oh, we need more money to pay back debt. We'll just go to the property investor ATM. And so those who don't have a medium to long-term horizon, they're just getting out. But what that does is it creates opportunity because prices despite undersupply narrative, prices have actually started to pull back here in Victoria as we speak today, which I think is particularly for your clients who go, well, why don't we, we're planning on improving the yield of this house that we've got and turning it into 2 or 3 townhouses. Now is a really good time because it's be fearful when others are greedy and greedy when others are fearful. Now's the time to actually get that bumper sticker into play because there is a sentiment that suggests, all right, if I have cash flow and I've got someone like you that's able to help and I'm pretty clear on what the vision is, I could buy this property now because I know what's coming because the underlying thesis is the hose is in the bath, mate, the plug is in and the conditions are looking pretty good for the next decade.
Mate, that's an amazing analogy. And I think because we're at the coalface and you hear these commentators and they say we're going to have a shortage and we're not building enough and we've got these targets that we want to hit and people are saying there's no way you're going to hit those targets. We've never hit them before. And we're going through a marketplace that's never been harder to get builders, to get investment, to get lending, to do these projects and get these new housing projects off the ground. It's going to be a long time. And I'm a property developer and it takes time.
Yeah, lead time is in your favour, isn't it? Because if you go, well, even if you want to have this, hand over the keys to your 2 or 3 townhouses.
We're talking 2 years.
25 anyway.
Yeah, that's right.
So you kind of got a front foot and go, okay, that's the North Star of when I want to actually have the outcome of what you do.
Yeah.
And now while everyone's a little uncertain, because here's the deal. Here's what I can tell you. We're recording this at the front half of 2024. I can tell you at the back end of 2024, it'll be a totally different story. Interest rates will start to come down. And then all of a sudden, people will start flocking into the market. And everyone goes, oh, wow, if only we could have done it when there wasn't this much competition. You can do that now if you've got the ability to see what's coming.
I think you're exactly right with what you're saying with immigration, lack of housing stock, inflation coming down, interest rates coming down. There's some really big pillars there that are going to go our way, which 100% I think it's exciting, but you need to have that bit of foresight, bit of faith, and sort of dive in. But yeah, 2020, 2030, it'd be interesting to look back on this episode, Bryce.
And the opportunity is, if I'd be interested to know what some of the conversations you're having with people who are sort of on the fence about whether they should go or whether they shouldn't. But borrowing capacity is dictating a lot of moves at the moment. Someone could have the intent to want to move, but the borrowing capacity at the moment says that they can't. But if you find yourself in a position where your intent is I want to go ahead and your capacity actually allows you, you find yourself in rare air at the minute where you actually can act on your urge to do this, particularly as we've been talking about for you, given the long lead times. How are you finding the conversations with clients who are in that category where they've definitely got the capacity, but they're sort of wavering on their intent based on external noise that they're hearing?
Yeah, great question. 2023 for us was a lot of people wavering on their intent, like absolutely. And I think we'll be looking back going, well, why didn't I start? Because I'd be 6 months, 10 months into this project and, about to meet the market at the end of 24 with, great townhouses to sell and sort of happy days. But I think it can be hard when the narrative isn't positive. I think it takes a lot for people to get past that when the media is sort of sinking the boots in like they do. I definitely think this year the people that maybe were sitting on the fence, they've built up that courage, and especially the smart ones. The smart ones, we've got a client come on board the other day, mortgage broker, a man of 50, 55 years of age, and he just said now's the time. He goes, I can see it in the cycles. I can. And exactly selling the story that you were saying 2 minutes ago was now's the time. Foreign investment's a real thing. Immigrants that have come over, they might be looking to get money out of their own countries. All these sorts of things they're permutating around us, and we can definitely sense that people want to invest. And like you said, we deal with active investors. They want to be active in the Melbourne property market. And these things that we're talking about, immigration, low housing stock, interest rates cuts, they haven't happened yet. Or they haven't got to where they're going to get to yet. So it'll be interesting, but we can definitely feel it, people coming back to the market. I even said on a couple of weeks ago, a podcast, that I feel like the development sites and that marketplace is moving. The competition's definitely come back, and that's that active investment market is coming back, I suppose.
Yeah, 100%. And so the thing is that you do get first mover advantage when the cycle changes too, and so the people that are feeling that sentiment will get access to that first mover advantage. And don't make a 20-year decision based on a couple of weeks of headlines. 6 months of headlines. The question that mate, I've been doing this since 1998. So here we are in my 26th year. People are still making decisions that ultimately you will not be able to be a judge of until at least a decade from now, based on the current headlines. And the ability to separate the finish line from where we're at now is difficult for most people. But the ones who are successful are usually the ones that can see that opportunity, because they're looking well and truly. They're measuring the outcome in a decade, not in a year. But anyone who's got those short time horizons generally are the ones that get the wobbliest.
Yeah, 100%. And I love your philosophies around, and we've got clients that some hold and get the tax breaks and all this sort of stuff and put themselves in the way of capital growth. Then we've got others that play that cycle and develop and sell. But in saying that, they'll sell and then they'll be back in the market. So, we sort of say, hey, we're a turn it around, couple of years and in and out and create our uplift. But you'll find these people keep playing. So they're playing that 10-year game as well, but they're just transacting through that time, I suppose. So they're playing the cycles and, still with a long-term approach, I suppose.
Mate, largely my portfolio has been a buy and hold, right? But I did develop some houses in Coffs Harbour back in the early 2000s.
I love this, mate. A couple of decades ago, you dived into a bit of property development.
But we caught a little bit of arbitrage on the buy and sell. But I wish I still held them now.
Yeah.
Because at the time I took the profit and run and it was really good. But I still have regret around not being the name on the title for those assets. So I think we're all playing different games, right? If you're a marathon runner and I'm a sprinter, there's no point comparing notes because we're playing different games. So in what you described before, some people might just want to play the sprinting game, and that's for obvious reasons. But I guess most of the wealthy people in this country make their money and park it in real estate.
Yep.
And I think park is really important. So if you can go in for the mindset of trying to find something that you can hold for as long as you can, ideally through generations, would be great. But I do have another development story a regretful development story.
Amazing. Please, love a story. Love a development story.
When I was living on the Gold Coast back in the early 2000s, we ended up buying 2 houses side by side in Tugun, which is just near the Coolangatta airport, as you know, Pete. And we bought them on option. We did due diligence, and it was 3 of us, me and two mates. And one of the guys was a banker, a business banker. Me and the other guy, Nick, we'd been in the property industry, so we weren't muppets, but we didn't know the development game that well. So we went and found a project manager who had an extraordinary amount of experience in the country, based on a connection that Nick had, and high rises, big teams, all that sort of stuff. So. And we made a fundamental mistake of misreading the cues that come from engaging the experience and expertise of someone who's been there and done that. So long story short, we asked him to project manage the build. It was going to be a 3-level walk up, so 21 2-bedroom apartments, the Gold Coast style with
yeah.
no lift.
Proper project though,
Proper project.
Yeah.
Had the car parks underneath.
Yep.
And he gave us 2 options. One was to do a consulting fee for the project management, or he said, instead of paying me that, I'll get some skin in the game so we all benefit from this.
Yeah.
And here's the one thing that we missed. Looking back, it seems so obvious, but at the time we got greedy. We said, let's not pay a percentage of the profit. Let's actually go and incrementally just pay the consulting fees. And here we are, fast forward now. We actually took the incentive out of the person who had all the IP, had all the experience, had all the expertise, all because we got greedy. If we had to put skin in the game, sure, we would have taken a smaller cut. But we ultimately I would be telling you this story, how I actually built these apartments, and there would be a legacy that you could go and see them. Well, the end of the story is we couldn't get the feasibility to work. We rescinded on our options. They went back to the market.
Yes.
There was a guy on the Gold Coast, Les Nichols, who had been a big developer. He just came and bought it, plonked it on, and made money on it. Right.
He did what he does.
Did what he does. So the important story here is, and I think it really ties into what you guys do, is you need to. Are you going to pay with time, or are you going to pay with money?
Yeah.
And we've been paying with time because that's 20 years ago. I don't have that experience. Whereas if we had paid with the money at the time to buy the expertise in the right way at the time. We would have not only would we have banked the profit, we probably would have kept 2 or 3 of them ourselves.
Yeah.
So then the journey that would have done to the portfolio. So I guess my biggest takeaway for anyone who's listening to this is development is fun and it's exciting and it's rewarding and it's profitable if you do it right. And you actually don't want to pay the tuition fee at the end of the project. You actually want to pay the tuition fee at the front of the project, in my view. And so you're going to pay either way. For a first-time developer or somebody who doesn't, you're going to pay either way. I'd actually say front-load it and get someone like yourself who knows what they're doing, who's not their first rodeo. They know all the mistakes and the pitfalls and all those sorts of things, which means that at the back end, sure, if you don't pay those fees up front, your profit looks bigger. But my experience is you don't get that profit at the end until you actually can do the dance, until you can actually fulfill the project to completion.
The profit lives at the end. The margin lives at the end.
It doesn't live on the spreadsheet at the beginning where everyone gets excited and we're all breaking bread over it, going, "How good's this?" It exists at the end when you've delivered the product. You've got the keys have been delivered. If it's buy and hold, you've got the tenants in the property. If it's buy and sell, you got the agent listed and sold the property. That's where the story needs to end, and that's where the focus is. So that's probably my takeaway for your community, that you're going to pay somewhere.
Yeah,
just decide where you're going to pay.
Decide where you're going to pay, and I think, like you say, you pay at the start, you get the value throughout the process. If you pay at the end, you've probably missed those opportunities. And I think that's a great point, and it's exactly what you do as well through your buyers advocacy. It's also helping people get involved, because some people will sit on the sidelines unless they have got that experience and that helping hand and that sort of credible source and expertise to say, hey, this is a great opportunity, I'm going to go do it. Like you said, you didn't end up doing it because you didn't go, hey, here you go, let's rock and roll, sort of thing. And that's 20 years ago, and I'd hate to think what sort of property's done in that time. So yeah, I think like you say, getting that expertise, navigating your way through and making sure you minimise the downside and the pitfalls and mitigate the risk, but also it'll give you the ability and confidence to step forward and take action. And
that's important. Like, that also is a bumper sticker, take action. But you and I have interviewed across both of our podcasts over the journey. We've interviewed some incredibly successful people. And if we were to sit down and write notes at the end of every interview that we've ever had on how they became successful, we'd actually find not many common things. Someone's done the development path, someone's bought and hold, someone's built businesses, someone's done... But there is one underlying common trait in all of those success stories, is at some point they reached a point where they went, am I actually going to take this next step or not? And they look around and they go, far out, there's a whole bunch of reasons why I shouldn't, but they actually took that step anyway. And I think the people who have been successful in your game are those who go on. Like, there's no absence of fear. It's actually going, all right, well, I'm feeling a bit wobbly. I'm a bit nervous. I feel like everyone else who faces the same thing, but I've actually mitigated as many risks as I possibly can. So therefore, I'm just going to step out in a bit of faith. I'm not talking about blind faith. I'm talking about considered, cautious faith, where we go, I've got to embrace the uncertainty of the unknown. Otherwise, if it was actually easy, everyone would be doing it and there'd be no opportunity to begin with.
Yeah.
So if you're feeling that feeling, embrace it and just try and lift your eyes and fast forward. I'm all the time fast forwarding to 2030. What would I think in 2030? With this decision I'm about to make, what would I think in 2030?
I like that.
Gets you out of jail, right? You've zoomed up. You've got the mouse and you've just zoomed out a little bit further and you're just going, how am I going to feel about the decision I'm going to make in 2030? Now, sometimes when we're stepping up to the plate at auction, buying for a client, we go, whew, feels like full price. But what would I think about the decision I'm making today in 2030? And it certainly helps you take action because, as we said before, that's the common denominator for everyone who's successful is they actually just take the next step.
Yeah, amazing, Bryce. Amazing advice, and thanks for that story of sort of not taking action. I know you've taken plenty of action and continue to take plenty of action, but I think just those lessons to hear that people that have been there and done it, you learn from that from those moments, and I know for a fact that you sort of do take action today. So learning from your lessons and getting better.
Thanks for having me on, mate.
Amazing. Thanks, Bryce. Host of the Property Couch, Bryce Holdaway. Thanks so much for your time. Plenty of nuggets in that. See you guys next week. Please drop any questions in there. I'll hit Bryce up. Make sure I get the answers for you. I was about to say see you at the top. Happy developing.